A lot of times when we are trying to apply for business credit, like business loans or anything like that, they want to see that you have a business that actually has, some history.
Right.
And so if you're forming LLCs and then shutting them down and forming them and shutting them down,
Right.
when you go to a bank to try and apply for a loan, they're like, all right, well, this is just another new entity that doesn't have any sort of history of bringing in revenue. And all a bank wants to know is that they're going to be paid back.
Yeah.
That's why I say it really depends on what your strategy is for your business. And that's why I'm going to stress again, talk to a business attorney, talk to a financial professional such as an accountant, tax planner, to make sure that you're making the best informed decision.
Welcome to the American Dreamers Festival. My name is Nekei Lewis, president and founder at American Dreamers. And today we have Antoinette Solomon from Solomon Law. Thank you so much for joining us today on today's panel. We're going to talk a little bit all about business law, and she's going to deep dive and break down some myths and, just explain a few things for you. So, Antoinette, welcome.
Thank you so much, Nekei. I'm so glad to be here.
Yes, and you look fabulous.
Thank you. You too, girl.
I love the outfit. So tell the listeners and the attendees a little bit about your background and who you are.
Okay, so I am Antoinette M. Solomon, principal attorney at the law offices of Antoinette M. Solomon. We're located in Newark, New Jersey, but I'm licensed in New York and New Jersey, so I can service any type of, transactional client. My law firm is a boutique transactional law firm, meaning that I specialize in all types of transactions, business, real estate, anything from sort of a contractual transaction perspective. So if you're looking to invest in a business, take on a partner in your business, or you're looking to make some, some long-term investment strategies, I would be the attorney that you sort of reach out to. My mantra at my firm is we help, our clients build, grow, and protect their assets in whatever way that looks like to you. And so basically we specialize in real estate, business law, and estate planning, and help our clients structure their businesses and their estate so that it protects, future generations. So that's what my firm's about.
Yes, and she is amazing. She loves what she does and super passionate. So let's dive right in. So when it comes to choosing the right structure, right, what factors should business owners, consider when deciding between an LLC or a corporation?
Yeah, so there are a number of factors that matter when you're choosing the right entity structure. Mm-hmm. Typically, most people are concerned about liability protection. As we all know, limited liability companies share the same sort of liability protection as corporations. And so a lot of people with smaller businesses, maybe they're, solos, similar to myself, have decided to structure their business as a limited liability corporation, also known as an LLC, which means that they are granted the same sort of liability protections as a corporation, but the tax structure is, very different. And that's another consideration why some people choose, an LLC versus a corporation is the tax treatment. So as we, when you are a solo owner and you have an LLC, that's taxed as a pass-through entity, meaning that the taxes are basically, it's just taxed as you as the individual, as opposed to like a C Corp or an S Corp, where you're taxed at the entity level and then you're also taxed at the personal level. And then some other considerations are, long-term strategy. A lot of people structure their businesses as corporations because maybe they think they may go public in the near future or take on large-scale investors, such as banks and private equity companies. And in those instances, those type of investors like to see you structured more as a corporation. So it really all depends on what the long-term strategy is for your business. And that's a great question because my firm helps, a variety of businesses figure out what structure, what makes sense for their long-term strategy. So thank you for asking.
Yes, absolutely. And thank you for breaking that down so eloquently. So can you walk us through like a few steps in registering an LLC? Because a lot of times, people get really confused about what they need or what documents is really required to get this started.
Yeah, so the main documents that are required to form a company, whether it's a limited liability company or a corporation, are sort of the articles of incorporation. For an LLC, it will be called a certificate of formation. These are sort of the main operative documents that are filed at the state and include all of, sort of the important information, the name of the business, how long the business will be in existence, the purpose of the business, who are the main members and or owners of the business.
Okay.
That's sort of where it breaks down that information at the state level. From there, the next most important thing is to select a registered agent for your business. And basically, depending on where your business is structured, the registered agent would serve as sort of your representative in that state of formation. And they would be responsible for accepting service on your behalf if you're ever served by the Secretary of State or any sort of entity. If they needed to fine you, the registered agent serves as your representative in that state and is required to sort of accept certain things on your behalf. So those are two very important pieces when you're forming companies, whether it's an LLC or a corporation. Another thing that I like to emphasize to my clients, even though some people think they may not need it, is having an operating agreement and or bylaws are of how the company is supposed to run and what the responsibilities of the parties are. A lot of people sort of just leave these things left to chance. And that is ripe for all types of disputes, especially amongst business partners when the responsibilities are not clearly outlined. So I would emphasize to this camera that I definitely recommend that all businesses, whether they're limited liability companies or corporations, to have some sort of operating agreement that sets out the responsibilities and the core functions of the business. And if you need help with that, like I said, if you're in New York and New Jersey, feel free to call me.
Got it. So how does the choice for state, when it comes to registration, impact like the benefits of LLC? Because a lot of times we hear a lot of these things on Instagram and social media. Oh, register in Delaware State or Montana, or like how does that all like work? And how does it like the impact of those benefits? Because I mean, really and truly, I mean, we're here in New Jersey, New York area, but it's a different benefit, from Montana or Delaware, right? So how do we differentiate all that?
So it really all depends, right? And this is where I go back to sort of the long-term strategy of your business. A lot of people tend to, especially a lot of larger corporations, tend to form in like a Delaware, Wisconsin, or Nevada, because those state laws are more, I won't say beneficial, but more fulsome with their business laws. So it's more ripe for business, litigation, and it serves as sort of better precedent for how to run your business. And so that's why people typically go with Delaware. And then usually in those states, there are lower reporting requirements. So for example, you may not have to disclose who the members of your LLC are in certain states. But on the flip side, when you form in those states, and say you're running business say you form in Delaware and you're running business in New Jersey, if you're doing that, you may have to file as a foreign business in the state that you actually operate in. And so even though you think you may be getting around some things by filing in these other states, when you're conducting business in the actual state that you live in, you still do have to, complete certain disclosure requirements. So it may not work for your business purpose. So that's why I definitely recommend all business owners, small, mid-size, or large, to consult with a business attorney and an accountant that could really help, make these entity structure decisions best fit your business. I think sometimes we like to, play fast and loose with these things. And say like, oh, I have an LLC, and not really understand what the implication of that is. I know people with hundreds of LLCs and they're backed up in, registered fees and all kinds of things. And so that's why I say speak to a licensed professional that could properly advise you on what the implications of each of these entities are and the states that you form in.
Absolutely. That was really great. I love how you broke that down, because we just hear about this so many times. It's like, which decision, especially as an entrepreneur and a business owner, you don't really know, which state to go with. Should you be doing these foreign entities? So I love how you broke that down. When it comes to liability protection, right? So how do LLCs and corporations differ in terms of like the liability protection, like for owners and shareholders?
So They both share like this similar sort of liability protection where it's like basically it's separated from your personal assets.
Okay.
But that's only if you are actually running the business as a business, right? And it's not sort of this quasi sub persona of yourself where you're commingling personal assets and sort of trying to run your personal life out of your business. So that's why I like to make very clear to people that even though an LLC is a little bit less formal than a corporation, it is still a company that the IRS looks at as a business entity.
Got it.
And so in order to maintain the liability protection that's sort of afforded to LLCs is you have to be running it as a business. That means that any expenses that sort of flow from the business should flow from that LLC and whatever bank account is tied to it. You shouldn't really be using personal credit cards to pay for business expenses or vice versa, using business expenses to sort of pay for personal expenses that aren't directly tied to the business.
Exactly.
That is how you can get caught up in an audit, and that is how you could potentially lose liability protection if you're ever sued, right? If for example, you have an LLC and you're running your business out of it, but you're not really running it as a business. It's just sort of yourself. You don't enter into agreements in the business name. You enter into agreements in your personal name. You don't sort of send correspondence from the business. You send it from your personal name, but you're receiving all the income to the business. When it comes time to sort of file your taxes, the IRS could look at that and say, well, are these really business expenses?
Right.
And then you'd have to, potentially have to justify that in an audit. Or if you're sued and they're like, oh, well, I was really dealing with, Jim instead of, Jim's painting company, your personal assets could potentially be looped in if you were sort of commingling them with the business assets.
Correct.
So that's why I say keep your business and your personal assets completely separate. Whatever, expenses or things that flow from the business, keep those strictly on the business, and whatever flows from your personal life, keep that separate.
I love how you broke that down. Absolutely. Separation is key. Okay. And you heard it from Miss Antoinette here first. So when it comes to, I guess you did mention about taxes and implications, right? I know like there's different tax structures for LLC versus corporations. How can like business owners optimize that with choosing the LLC or the corporation?
Yeah, so it depends, and that's definitely where an accountant comes into place. I am not going to play like an accountant today, but I will say in terms of like just from a basic perspective, like I mentioned before, LLCs are taxed as pass-through entities. Basically, they are disregarded entities when you are a solo owner, right? So people like me, you, Nekei, people who own, solely own their businesses and they form them as LLCs. When we file our taxes, even though we file the business on a separate schedule, the taxes flow through directly to us and we're taxed as one sort of entity. Whereas a corporation, C Corp or S Corp, it's taxed at the corporation level, and then you are taxed personally for whatever money that flowed to you through that business. So it all depends on what you want to do in the long term. And so that's why you have to partner up with a very smart accountant to understand the sort of tax implications.
Exactly. That's what we wanted to make sure, because sometimes what I wanted people to understand with that is that, you need both the lawyer and your tax professional to work together, right? So that you can get the best strategy and exactly which kind of, corporation or LLC that suits your needs. When it comes to compliance, right? So we're going on compliance requirements. Should business owners be aware of like should they do after registering? So they got the LLC, they got their corporation. So is there any ongoing compliance stuff that we need to be worried about?
So just to go back to taxes, there's definitely a requirement to file annual taxes, right? That I can't stress that enough. Make sure that you are filing taxes, your personal taxes and the taxes of any LLC or corporation that you own shares in. Make sure that those taxes are being filed, and that if it's a corporation, you're getting the K-1, and if it's an LLC, you're getting whatever reporting statements are coming from that. Just to go back to the tax piece, I just want to make clear, when we have an LLC that's owned by multiple people, that's taxed as a partnership. And so that's sort of another wrinkle where if you have more than one person that owns an LLC, that would not be a disregarded entity, right? Like that's taxed at that entity level, and then you'll have to file your personal taxes. I just wanted to sort of make sure I made that distinction. But then about ongoing compliance, one is filing taxes, extremely important. Make sure you file taxes for all of the entities you own a share in, or if you're not the sort of main person that's running the business, make sure that the business is running, filing the taxes, and you get a copy of it. And then there's something called an annual report in New Jersey. It could be called that in other states, but I know specifically in New Jersey, it's called an annual report. And that's where you have to pay sort of your $75 fee every year to keep, your active status in the state, say that you're in good status in the state and that you don't have any back fees owed. If you miss that, you will possibly have to pay some sort of fine plus the $75, but they are extremely important. That they usually send you a notice like 2 or 3 months before your anniversary, and then you have that time period to pay it.
Right.
Do not throw that notice away.
Don't throw that notice away.
That's why it's so important to have a registered agent that is like on top of their job, because the registered agent actually will be the one that will receive that notice. So that's very important. You don't just want to name anybody as your registered agent. You want to make sure that it's somebody that is going to be on top of their responsibility to make sure that all of your sort of state fees are paid and your entity can continue to run business. You don't want to be interrupted because, your cousin forgot to file to pay the $75. Exactly. Make sure that it is somebody responsible that will pay it on your behalf. And there are companies that serve as registered agents, attorneys serve as registered agents, notaries. It's all kinds of different people throughout the state that you could sort of Google and figure out who has the best fee and could make sure that you stay in compliance.
I love that. I love that. Okay, so we're talking about also raising capital. This is also part of business, right? I know part of your background, if you want to tell the listeners a little bit about your background when it comes to raising capital. Yeah. And then we'll dive into, I have a question here for you.
Yeah, of course. Yeah. So I started at a firm in New Jersey as a general corporate associate where I helped small and mid-sized companies. I basically served as their in-house counsel. I did almost everything for them. So that's why I have such a broad, experience, real estate, employment law, all kinds of different areas of law. From there, I went to work at a hedge fund in the city, and I was in the private funds department where I helped structure and form the private funds for Guggenheim Partners. And basically a private fund is an investment vehicle for accredited investors where they pool large amounts of cash to invest in private operational companies. And so one of the biggest projects that I worked on was an investment into what is that company? GoPuff.
Okay.
So I helped with some financing for GoPuff, which was really cool before they went public. And that's usually what, companies will do is very large private companies will go to private equity firms, hedge funds to raise massive amounts of capital so that they can go public. So that's what I helped with. From there, I moved to Goldman Sachs and I was doing the same exact thing, helping structure and form private funds, mainly the impact funds. Right. So if you've ever heard of 1 Million Black Women or GS Launch, any of those sort of programs, I worked on the private funds that helped fund those programs to make it possible to, for Black and brown women to complete those types of programs. So it was really cool seeing how really wealthy people pool their capital to make more money. And while I was there, I was like, it's cool, right? I was doing something really interesting, but I was just like, I'm just sort of helping the rich get richer. And there was this calling in me that was like, you need to go back into your community and sort of take these skills and help create the next generation of Black and brown millionaires. And so that's what I did. I left Goldman and then I started my firm and now I'm here talking to you.
I love it. I love it. And when it comes to, so for the LLCs and corporations, like, how does that differ when raising capital, and like what are the advantages of each structure, like from what you've seen?
Yeah, so going back to, I'm going to stress the tax point again, right? So typically the LLCs are either taxed at the pass-through level if you're a solo owner, or taxed as a partnership. And when you're taking on investors and trying to raise capital, that structure just doesn't work usually for those types of investors because one, it gives them way too much exposure to liability, right? As an LLC, when you take on a member, they are an owner in whatever the share is that they, take part in. So if they have 20% ownership, they're usually 20% responsible for whatever happens. And so usually what large scale investors will do is if you are structured as an LLC, they will, as part of the investment processes, they will have you restructure and have you set up the company as whether an S corp or a C corp, whatever makes sense for them, so that you're no longer seen as sort of the owner. Now you're also seen as an employee with a balance with the line as a line item, and now they can sort of understand where the expenses are coming from to run the business and how much they're going to get at the end of the day when those shares convert to public shares. Because that's usually what most large-scale investors care about is maximizing the share potential that they're going to receive after they make this investment. And so an LLC just doesn't work like that. Right. It's more corporations where you get sort of the K-1s and the financial statements. Then they can sort of understand the business from a financial perspective a lot better. So that's why you have to be in contact with attorneys like me to make sure that you're running your business in a way that allows you to take on that type of investment in a smart way.
Yeah, that makes a whole lot of sense because, again, sometimes as entrepreneurs think, well, we have an LLC and we can get funding, but
they get that funding and they're like, this is not what we're investing in.
Right, exactly, because you may not have the right structure, you're not set up that way, so it really depends, how you're set up, and making sure that you're set up the right way and you're speaking to an attorney and you're also speaking to a financial person to understand, is that really the way you want to go? Exactly. Because sometimes it's not the way that you want to go. And then you just, set up your LLC or your corporation incorrectly, or you didn't put it to an S corp, or, there's so many different ways in how that goes. So a lot of times, and I've also, some of the attendees have asked some of these questions, is like, what happens, especially if you're buying a business, right? Buying another LLC, do you use that same paperwork? Do you buy the LLC that way? Like, how does that work?
Obviously every situation is different. So I don't want to give this sort of generic answer, but I would say if your plan is to buy someone else's business, speak to an attorney before you do that, because, and definitely speak to your tax professional, because there's a big difference between buying the business, right? Where you're buying their LLC and you're buying their assets. Yeah. So when you're buying their LLC, right, you're taking on not only their assets, you're taking on their liabilities, their reputation, you're taking on everything that sort of flows from it. And then that could be taxed as a totally different event, as opposed to buying all of the assets of the business, you taking over everything under your own business entity, and then they're able to shut down their business entity and you can sort of continue operating the business as you see fit. So it's really important to speak with an attorney and an accountant to really understand how is this going to affect you from a tax perspective, and then ask yourself, what is the sort of reputation of that business? Yeah. And is it worth buying that business in whole versus just buying it sort of for the parts? So yeah, it all depends.
Got that. And a lot of times we buy or we have multiple LLCs. Like, is it okay? Like, we don't use it. Should we dissolve it? Or should we just leave it inactive?
Well, that depends. It's such a lawyer answer, right? Like, it depends. But no, it really does depend. Yeah. So I have some people who keep certain LLCs active because they know they're going to continue to invest in real estate. Maybe they haven't done it for a few years, but they know that they're going to make, another investment with a partner or something. And so maybe it's inactive for a while, but they keep it active just so they don't have to go through the whole formation process again. Another thing is, a lot of times when we are trying to apply for business credit, like business loans or anything like that, they want to see that you have a business that actually has, some history. Right. And so if you're forming LLCs and then shutting them down and forming them and shutting them down, when you go to a bank to try and apply for a loan, they're like, all right, well, this is just another new entity that doesn't have any sort of history of bringing in revenue. And all a bank wants to know is that they're going to be paid back. Yes. So That's why I say it really depends on what your strategy is for your business. Are you just taking a little time away? Maybe you're, winding down some of your business lines, but in the future that, you got something in development that's going to take off. So maybe it makes sense to keep it open, or maybe you just formed it for a short-term project so you could run some expenses through it and then you don't need it anymore. So it really all depends on what your long-term strategy is. And that's why I'm going to stress again, talk to a business attorney, talk to a financial professional such as an accountant, tax planner, so that you could be in the know to understand to make sure that you're making the best informed decision.
Absolutely, absolutely. And, I love how you eloquently broke that down because a lot of times, entrepreneurs, there's so much information, we just get confused out there. I mean, I hear it all the time when I speak to other people, different startups, early entrepreneurs, people who don't have LLCs, they already have LLCs, they don't know what to do with it, they're confused about it, they have multiple LLCs, multiple members, So it's a lot to navigate alone. And that's why the importance of building a relationship with an attorney, having an attorney that understands what your goals are, what you're trying to do, and then giving you that plan and the paperwork to go with that, right? So yeah, is there anything else that you love our attendees to know when it comes to business law that you would like to drop in there? You're more than welcome.
I think I'm just going to stress it again.
Yes.
As a business owner, the core people that you need in your corner, even if you don't use them all the time, you want to make sure that you're cultivating relationships with business attorneys. You're cultivating relationships with banks. Bankers are extremely important because the last thing you want is to go into a bank and say, hey, I need a HELOC to bootstrap my company until I get this big investor. And the bank has never heard of you. And now they have to go through this whole vetting process. Yeah. So it is definitely important to cultivate relationships with bankers, cultivate relationships with accountants, financial professionals, especially financial advisors. Talk to these people about what your strategy is and what would make sense, what decisions you should make, if you should pivot in certain situations. It's super important to talk to those individuals. And then another big piece that we don't talk about enough is an insurance professional. Like, make sure you have some sort of professional liability insurance professional, workman's comp, errors and omissions, all of those different insurance professionals that just in case anything goes wrong, you make sure that you are covered. And lastly, succession planning is extremely important for business owners. You want your business to be able to run if something happens to you, or if you want to just take a vacation. So you make sure that you are connecting with individuals that can help you properly plan for the future, help you scale, help you grow, so that you can sort of sit back and enjoy the fruits of your labor and not be so stressed. Yes. The whole goal is financial freedom. Correct. And so we want to make sure that we are running our business in a smart way so that we could enjoy the fruits of our labors.
I love that. So this is the American Dreamers Festival. Thank you so much, Antoinette, for dropping all those gems. She just gave it. I hope you guys took notes. So put your questions in the chat, right? We're going to have her information available to you in the attendee guide. So you can reach out to her with any questions, booking consultation, say you heard it here in American Dreamers. And yeah, I'm so excited. Thank you so much for joining us today.
Thank you, Nekei. This was great. I really enjoyed it.
Absolutely.